I want to be able to live the life that I want to live, and to be in debt and to be working for someone in the architecture career, never really realizing my dreams as like designing what I want, or to own my own firm, or to do these goals that I had, that you have as a young architect, to realize that'll never happen in my lifetime because of the debt I'm in. It really forced me to start to look at other things, and it's just a scam that's reverse splitting over and over. If the supply is too low, I'll look to not short it, and then when the supply is, falls within my criteria, and I will look to short it. The CEO had like multiple wives and will funnel shares through his wives and his ex-wives, and so it's like the character of the management, of the CEOs in particular, or the people, the founders, usually a red flag.
Hello, and welcome to the Trader's Journey for Investors Underground. In this episode, it's an honor to be joined by David Capablanca, also known as Reverse Long. David's journey began as a student before he discovered the stock market and became a seven-figure trader. Today, he's built a strong reputation as a fearless short seller. His investigative works have helped expose fraudulent companies, helped savvy investors to avoid catastrophic losses, and he's helped aspiring traders to navigate the markets. All of this has earned him comparisons to being the Batman on Wall Street. But David's journey is more than just big profits and short selling. It's a tale about discipline, resilience, and purpose. It's my honor to introduce David Capablanca. David, thanks for being here, and welcome to the show.
Thanks, Anthony. Thanks for having me. It's great to be here as well.
Yeah, David, you're one of those guys that I've seen in interviews and have watched your, Friendly Bear podcast, and always wanted to get to meet you. And then we recently did get to meet in Toronto at Traders for a Cause, and realized you're just a really stand-up dude, and really glad to have met you and had a great time meeting you. So I wanted to have you on.
Thanks, Anthony, and likewise. That's why it's good to get out. Us as traders, we're in little offices or rooms or houses, wherever. We're all like confined, so it's good to get out. I make an effort to go and travel, and trading and Traders for a Cause is a great excuse to go travel. So I've been to a few of them this year, and yeah, it's great to meet traders in person. And yeah, likewise, man, you're a stand-up guy as well, so it's been a pleasure to meet a bunch of traders that are on the same journey as us, so.
Yeah, absolutely. And that journey is definitely one of the things that always stuck out to me about you. The one thing that I knew initially was that you were a student, and, you discovered trading after being a student. And I was part of that student group that had a hard time trying to figure out what you were actually going to be, and realizing that the job market isn't always going to give you what you're looking for at the time that you are looking for it. So, if it's okay with you, I'd love to start there. And just, how'd you discover the stock market and the world of trading?
Yeah, that's a very good question. So, a student. So, yeah, I definitely did. I was in graduate school at UCLA, and I had I recovered from a brain operation, and I got myself in a real big pickle of financial, student debt and hospital bills and all this over. So yeah, so when I finished graduate school, my master's, I was stuck in a situation where, unfortunately, architects, they don't get paid as well. It's like a really prestigious degree and all this. You're an architect, but the pay doesn't justify. So like I had never-ending student loans, let's put it that way, and bills, medical bills, and the cost of living in Los Angeles and bills like that. It's just I was getting squeezed just living my life, like squeezed. Instead of stocks, I was getting squeezed with the bills and with debt. So I was looking into proactively. After 6 months of graduating, I got the first bill for student loans, and I was like, oh my God, this is I need to do something about this. I'm never gonna pay this off. Like I'll be like retired and I'll still be paying bills, So I decided I didn't want to live like that. And one of the things, a life-changing moment for me was in 2010, I survived a brain tumor operation. It was a big ordeal. I recovered. But I remember the doctor telling me he gave me 50 years of life he added 50 years to my life. And that's more or less. It depends on how I take care of my health. But that's just was like, he just gave me that right there. And that's always been lingering in the back of my head. So like, I want to be able to live the life that I want to live, and to be in debt and to be working for someone in the architecture career and never really realizing my dreams as like designing what I want, or to own my own firm, or to do these goals that I had, that you have as a young architect. And to realize that'll never happen in my lifetime because of the debt I'm in. It really forced me to start to look at other things, and the only thing I could think of at the time was real estate, because real estate relates to architecture. But quickly, when I started to like focus in on the solution of the debt and look into real estate, then other things started popping up, which were always there. It's just like now I just started to be aware of them. Like, so the stock market was always there. It's just I was never paying attention to it. It was never my focus. But now, since I was in that situation of trying to find a solution for this problem I'm in, now I'm focused. Now maybe YouTube starts feeding me things, about stocks. I don't know, and I start to pay attention. Maybe it always was feeding me stocks. It's just I never paid attention. But now I was paying attention, and then I was like, stock trading. Can that be done? It seems kind of scammy, because like you see a lot of back then, flashy material things was like, the only thing, like stock courses were related to that back then. This is like 2015, so it wasn't presented, anything stock trading related, it wasn't presented like in a professional kind of format or a way that looked like it could, like this could be a profession. Because I was coming from an architecture background, so it's like kind of like I wasn't gonna fall for, or I wasn't the type of person that's gonna go for Lambos and stuff. But that's what that's the first course I signed up for. So I signed up for some courses that had like some material things thrown in there, and I looked into it, and I realized this is real. I even reached out to some people taking those courses, and they said they said it was real, and the results were real. And I took a chance, and I took a chance to study the material from limited resources back in 2015. There wasn't really much out there, and I just decided I didn't want to live with any regret when I'm older. Like, I didn't give stock trading a real shot, and so it's like it was like live like with regret, or live in debt and never be happy or something. So I was like, I'm just gonna focus on learning this the best I can, and I'm not gonna have a timetable. I'm just gonna give it a real 10,000 hours. I decided that early on, and just like architecture, I spent 10 years in architecture school, bachelor's and master's, and it was 10 years. So I was like, I don't know if it's gonna take 10 years, but I'm gonna give it my all, like a real shot, and that's what brought me to it. Just all the debt, and just realizing I needed to rehaul my whole life, and the journey for learning. I didn't know early on, but I didn't know all the self-improvement I had to make in order to give myself that real shot. I thought it was just a skill that you learn like in school or something, or just something like, you learn some technical analysis, you learn fundamental analysis. But along the way, it was just like learning about just what it takes to be a successful entrepreneur, like all this personal growth stuff, and all just like the habits I had to get rid of, and the people I had to kind of leave behind along the way to become like a profitable trader, or like the trader, 7-figure trader and up, someone that's highly successful at that skill. So that's the reason why I love trading, because like any other regular career path, it really doesn't force you to become a better person, basically, and here we are. I get to see you in Toronto. I got to go to Traders for a Cause in Puerto Rico, in San Diego, Toronto. It's like everywhere, So I was at a conference in Madrid earlier. I got my conference in. It's a beautiful path, So like I'm really grateful for the whole journey, for sure. But yeah, that what brought me here was just I guess it was desperation, Anthony. I guess I didn't know anything else to do.
If you're looking for ways to take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. Members have access to the morning broadcasts where the IU moderators share their trade ideas for the day ahead during the pre-market session. Members have access to the midday study sessions with Stan, the midweek study sessions with Sam, webinars, moderator watch lists, and all the other tools and resources that Investors Underground has to offer. Listeners of the Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our episode with David Capablanca. It sounds like necessity, as well, right? And even backing up, it's incredible and such great news that, you have your health back, because in so many ways, that's the greatest of all of these potential wealths, is having your health. And that makes me happy to see and to know that you're doing well, and healthy and able to do all of this as well.
Yeah, in our life, I'm 41 now. I don't even count past 40 anymore. I was about to say 40. I said, but I'm really 41. And it's like, during your life, I guess for me, I had the brain tumor operation at 25 years old. But I didn't get into trading at 32 years old, or 31 years old. So in your late 20s or 30s, it really takes a drastic traumatic experience to change. You are who you are usually. But when you to completely change the person, after that brain operation, I completely changed, a different person. And then after trading, I'm a different person. So trading requires that out of you. So for me, I think it was easier because of that experience that I went through, which was fortunately, I survived it and it made me stronger. But trading requires that out of you to really change, to become successful at it. So because as we get older, it's harder for us to change our ways. I think about my parents and stuff. It's they're stuck in their ways. So yeah. But trading requires that out of you, no matter what age you are or whatever. So I think that experience, that life or death scenario, I reflect on it a lot of times, and it's like my secret power. I can tap into it all the time. That be grateful, about my surviving it, and and just that urgency, that sense of urgency that we're not here forever. I got to make it count, and that makes me really light a fire under me all the time. So yeah, that's absolutely fuel for inspiration to live your best possible life, which it sounds like you're doing. One of the things that I was curious about is whether there's components from your architecture days that you're able to use as well as influence in your trading. Some of the processes and ways of thinking, does any of that have any influence on what you do in trading at all? Yeah, so it does. And I like to go back to my alma mater all the time, University of Florida, and they invite me there to give lectures to the students, architecture students, and because I do exactly that. I think my trading is very unique. With trading, before you come to trading, you got to leverage kind of all the things from before trading, or things that you can apply, because for example, for me, it was architecture. I spent a lot of time, over 10 years in the field. I got to take something out of it to relate. It's the world is your oyster. You can kind of you relate whatever you are. I know people that relate music to trading, engineering to trading, or something that systematic traders are coding and stuff. You got to take something from your life and put it to your advantage, leverage it for trading. So for me, it was architecture. Right away I noticed architecture is both an art and a science. Trading's an art and a science. It's you got to use creativity all the time. For example, with price action, sensing what kind of, who's on the other side of the trade. Is it an algorithm? Is it a bigger player? Does someone take up the float? Are the buyers going to sell here? Is there fear? Is there greed? So constantly using exercising that creativity. But also, architects are the composer of a symphony, if you will, so a lot of parts come together for the whole, and the architect is the visionary for it. So for example, in a building, you have structures, material, sunlight, culture around the surroundings, all these things, and the architect has to come up with the vision for a building, and and realize it, and conduct all the the whole operation from the construction workers, will oversee everything. So for trading, it's kind of like that for me. Well, for me, it's technical analysis, it's fundamental analysis, it's market conditions, it's risk management, it's understanding technicals, looking at, I like Ask Edgar, using AI, leveraging AI for filings, leveraging all this stuff, and understanding dilution, and understanding what is the company planning, what's their history, so it's like using all this creativity to piece together a puzzle. As I think that comes from my architecture side, and it's very unique to how I trade, because when you're learning how to trade, you learn bits and pieces from several different mentors, and your pods. We talked about that before the interview. Your pods, but then you become like your own person. So for me, it was that really putting that puzzle together, and as a trader.
Yeah, I love that analogy of the symphony and putting things together, and equating that to architecture and the markets as well, because there are so many different variables. And just like in architecture, you have to kind of make your trading strategy, or even just a single trade, almost like earthquake proof, right? Or like
exactly,
like able to survive whatever. These are not natural disasters, especially when we're talking about small caps and frauds, but a combination of natural disasters, maybe like too many crowded players, versus some of the more synthetic, sort of man-made disasters that can happen on any given small cap company where there's maybe a low float or things like that. So I definitely appreciate that type of metaphor used for trading. I think it's a great one.
Yeah, I'm glad you mentioned that one, because I speak about that quite a bit. So when we go take an airplane ride, no one really worries about anything, because the results, or the percentage of something happen is so minuscule. And the same thing with an elevator. I took an elevator. My office here where I'm at is it's in the skyscraper. And I've taken this elevator for 5-6 years now, up and down, up and down. I've never worried about it even once, because they got the engineering so well, and there's like multiple, safety measures, like in case anything happens, and it never happens. You never hear about an elevator, malfunctioning, or you kind of, it's not that big. It's nothing to worry about, and it's because they have the engineering so well, and they've planned, and just like a pilot has the checklist, and goes through that checklist. So it's like, it's got to be like that. Trading's got to be like that. And the same thing with the earthquake proofing. Like, the earthquakes are designed. So sometimes I'm in California, they have some earthquakes. Building shakes a little bit, I don't worry about it. I mean, especially as an architect, I know that the building code is up to, I think, 9.6 earthquakes. Anything built up to date, it should be retrofitted for 9.6 earthquake. So, I'm not worried about it. But, and that's the way trading's got to be. That you are the engineer of how you set up your risk management, your trading, and it's got to be like that. It shouldn't be a roller coaster ride all the time.
Yeah, absolutely. And I want to talk about that for a little bit, which is like your trading and your style and how you built it, and put it together. In sum, how would you describe your trading style, and how did it come together for you?
So for me, it's a combination of technicals and fundamentals, and using the fundamentals as a big part of my, let's say, putting the puzzle together to make a thesis for a trade, and then trading off that trade, trading the price action off that thesis, So because with small caps, the fundamentals, they really they're there as a backdrop, but what's driving the prices are supply and demand and the price action. So, but I do use fundamentals to have more conviction for my thesis, to whether to put a little bit bigger size or just hold it a little longer, so to let that conviction play out. So that, I would say, is just fun. Like, how would you describe that? Just a well-rounded short seller, I guess. Just is considering multiple things to piece the puzzle together, using dilution, using all these things that we have tools now for, like with AI and stuff. It's very easy to piece together a nice thesis, to have that thesis and to trade off of it, and then having strict criteria. So, but as I'm not confined in a box of like I'm a technical trader, I'm a fundamental trader, or I would say I'm a short selling focused trader. I do long now as well. I long the stocks that I don't short, because I have strict criteria of what I'm not going to short. And over the years, I've realized, and through data and tracking and through experience seeing it, these make great longs. So, but yeah, I'm just a well-rounded short seller trader, short selling focused trader.
There are definitely places for fundamental research and analysis and reading through things, but correct me if I'm wrong, but it sounds like you understand that what you read in filings isn't entirely the whole story, because the price action can very easily just overshadow all of that.
Absolutely, yeah. So especially with the smaller cap stocks, even mid caps, these days there's more volume. There's a lot of volume these days. So that volume is a form of demand, and that demand can push these stocks past any thing that's logical. So yeah, the fundamentals is there as a backdrop, as a guidance, especially with smaller caps and mid caps. But it does help add a lot of conviction for the end game. We know how the movie's going to play out. So it's just, you got to be ready. The squeezes can be really nasty squeezes. We've seen hundreds and even thousands of % squeezes on a regular basis, the past couple of years. So yeah.
Do you remember one particular stock early on that helped you realize that, that might be your style? Short selling, small caps.
Yeah.
Understanding the fundamentals. Does one name come to mind?
It does.
For you,
it does. Yeah. So from 2015 to 2018, I was just I was like evolving to become a serious student like trader. I was nowhere near profitability or anything. I was just I was a mess. I was still going out on the weekends. I was still living a life just like a lot of bad habits. I just had bad habits. Anyway, I ended up, so part of that time period, I ended up doing odd jobs, like even driving Uber, tutoring. I like tutoring a lot. I tutored kids for some money, and then I rented a small office across the street, one of these like WeWorks kind of things, like a shared office. And I was like, I'm just going to study trading, and I'm going to work tutoring, very minimal, but like I really just want to study. I need to study. And as I was studying, I looked more into short selling nonstop. I was like going what do you call it, like mad scientist with short selling. And there was one stock I learned about, the paid pump and dumps, and there was one stock, PRED. I'll never forget this stock. I'll never forget it. And this is 2018, and I have like a very small account, an Interactive Brokers account with a few $1,000s that I put together from tutoring and Uber, and I don't know, I was doing like Postmates or something, and just practicing with that small Interactive Brokers account. And PRED, they sent out emails. I had this burner email, and I put all these paid pump and dumps. I signed up to them. I would get like so many, and even though I couldn't short them all, it was a good experience. And I had the drive to kind of dig into this whole how do you say this, the whole dark world of pumpers and stuff. So pred was one of them, going bonkers in the emails. And they had this old website back then, iHub. I think it's useless now, but back then there used to be a lot of pumpers on there and a lot of people losing money, victims and stuff. And here I was trying to change my life, and studying nonstop, and coming from the professional world of architecture, kind of bitter a bit. I was like, man, I was studying and went to school and got all this debt. I went to the good schools. I did the best I could in the classes, and now I'm like, I got nothing to show for it, and these guys are out here pumping stocks and becoming super rich, and here I am, like, I had changed my phone number at the time, and I was just like a hermit in that office, in there all the time. Anyway, PRED, this famous pumper, Birdman, he was pumping it. This old guy with the parrot on his shoulder. And he was pumping it, and he had this whole posse of people that would just buy whatever he said. And he's notorious for like pumping and dumping stocks since like the 80s. He's like Wolf of Wall Street kind of guy. And I looked into him so much, and I even called him up a couple times. And I even, and lo and behold, Nate from Hindenburg was actually monitoring the boards and seeing like I would actually like interact with these bag holders of the stock, and it was just like it was you can't really convince a bag holder in a message board anything. These guys are just they're lost. But I would dig into the CEO. I forgot his name, but so much, and I would just like put it out there for people to see, and it was a good lesson of me understanding how these investors, these gullible investors operate. It's just like once they buy into the pump, they will not accept, the truth. They just like they're bought into it, So the trick early on, I learned that like the trick for a short report is to have the evidence so damning that it's like a checkmate. You have to do a checkmate for those people that are locked in and they will never sell, and even though what they bought is a scam. For them to realize defeat and sell, now that's the checkmate. So it's and that's where you get that nice selling, that waterfall selling, and less squeeze, So because it's natural selling. Excuse me.
Yeah.
Yeah, maybe we'll cut that part a little bit, but if not, whatever. But yeah. So Nate was on there. Hindenburg had just started recently. I don't know, like a year or so ago. And they put out like a couple reports, I think like 2 smaller reports. And then they put out a report on PRED. And that was one of their very first successful reports. And this was on PRED was on the OTC. So Hindenburg put out an OTC report. So it was just inspiring to see them grow. And I kind of had this like sort of a relationship with Nate a little bit, so it was cool. And that was my first time really investigating something with like a sense of vengeance, and I think like for me that was that was eye-opening, because it's like to have that drive to take it that far and to go without monetary gain, because I think that's the way to go. It's like, you can't stop someone like that. Where he's not just moving. It's not just for the money. It's for the love. There's something driving this person to do that, and that's what drove that. I used that like for trading, for reports, for everything. It's just like that drive to get it done. So you know what I mean. So to see that everything, to see it through, and yeah, it was a good experience. It was definitely a good experience. But yeah, PRED, I don't think it exists anymore.
When that small account finally grew a little bit more, was that the first type of strategy that you pursued, was short selling based on what you had seen in PRED?
Yeah. So the first strategy I had with that Interactive Brokers account was just paid pump and dumps, just short paid pump and dumps. And it worked well. Now, back then, you could use only Interactive Brokers and get the job done, and they would move a lot slower. These days, it's a lot different. There's a lot more volatility, and these things squeeze a lot more, so it's not as calm as it used to be. But it is more lucrative these days, though. But yeah, that I just focused only on that, and while I learned other things as well, I was just always learning something new. But that's how I started, just paid promotions, and just the drive to investigate them and just to go deep into them and to build that conviction for a thesis to short it. Because the market was just, at the time especially too, when you're kind of on your own, more or less, I was on my own learning. Price action seemed kind of crazy. it just seemed very dangerous, and for the little funds that I had, so I just stuck to something safe, and I grew it. And in 2020, the market went insane, So 2020, I topped off the account and I traded over. It was a 29K account, and from then, actually 2020, I made I made a good 6 figures, more than 6 figures, just trading pre-market alone. Because I was actually in that shared office overnight. Like, I was studying, doing all-nighters, and in the West Coast, the market opens at 1 a.m. in the pre-market, and I noticed a pattern of like these spikes and fades, these gap ups and fades, like in the 4 a.m. And I didn't even know what a gap up was. I didn't know any of that, but I knew that I saw that pattern repeatedly happening, and mostly for biotechs. So a lot of times in COVID, there was a lot of uncertainty with in the air with and biotechs. The biotech sector was the one like capitalizing on it. So, and pharmaceuticals and this kind of thing. So it'd be like stocks that came up with news, or that were rumored to be having like more rubber gloves, more masks, more rubbing alcohol, something. They would go crazy in the pre-market and fade all the way back down by the open. And that's what got me a really nice foundation capital, to be able to expand from there. And then 2021, the meme stocks went crazy, and I capitalized off some sympathies, but mostly just 2021 was I moved to Puerto Rico, and I was there for just under 2 years, and I got to really learn from some other traders and connect with some other traders there, and that's what and really collaborate on some short reports, and take it to the next level.
Could you talk a little bit about the experience of meeting up with other traders and getting to work alongside some other people who are aligned with what your trading goals are? Could you talk a little bit about the benefits of doing that, or any things that traders and the audience listening might want to consider about, maybe moving or even just working with other traders?
Yeah, so Puerto Rico is kind of drastic. So you got to understand too my situation. No one knew who I was. I had no social media 2021. My phone number, only like a few people had it. I was locked in a room. All my architecture colleagues, they had no clue what I was doing. I'm sure it got back to me, actually. Like, oh, what happened to David? Oh, I heard he's I don't know what he's doing. I think he's trading stocks. It's like, it was just weird. But like when I had that initial few $100,000 of 6 figures in 2021, I was like, okay, it makes sense for me to go to Puerto Rico. They have the tax incentive there, and then also there was an office down there, and it's Lucci's office. I saw him on. I actually saw you guys, Traders for a Cause virtual. I think you guys made it free, which was good because I was very cheap back then too. It was free, and I was doing an all-nighter in the office, and you guys had like a marathon. I don't know if you remember this, the Traders for a Cause marathon or something. And I saw Lucci in an office there by himself saying, oh, I'm in Puerto Rico. And that's the first time I found out about that. And I saw, I knew Puerto Rico was a tax haven, and I looked into it. And so I went to go check out Lucci's office, and then in April, or I think it was April or March. And then by April, I had moved in there. So that was right in the middle of the meme stock mania, 2021. And at TradeSpace, I was there for a year and a half, like 13, 14 months. And right away, it was kind of weird for me. I'll tell you that, because I had been secluded like a hermit. And I'm not naturally like a hermit, it's just like I had to go that way. Like Batman disappeared for like 6 years or something. That's the way I saw it. You mentioned Batman earlier. Really, it's like I was really doing that. So, so I had really little interaction for like 2 years leading up to that, 2021. Like 2018, 19, 20, I had like no interaction socially, like very, And then when I went there, it was kind of weird to interact. And then like I got used to it pretty fast, and I was like, I I was so obsessed with improving and learning because I didn't know that much. I knew that pre-market strategy I had that was limited, and I knew the paid pump and dumps. We're in some kind of crazy market environment now, like a black swan environment, like 1999, like something crazy, and I don't want to be swing shorting these pump and dumps, because what if one of them comes out with some news of COVID or meme stock or something? So I was really hungry to observe and just everything around me. And Puerto Rico is a place where there's traders everywhere, and it's not as easy, because in the past and in my podcast too, I used to say, oh yeah, just go to Puerto Rico, just go there. But it's like it's not, you gotta like really add value to people. Like I was really adding value, a lot of value to everybody. I knew I didn't know enough, and I would add value to whoever I would interact with. Like for example, in the office, I would always make a watch list and put it in the chat there, and like I would be asking good questions. I wouldn't be annoying people. I'd be really just trying to add value. And with that too, I started the Friendly Bear podcast, so I can interview people and have a nice space to interview and add value, because people like to share their stories. And so that got me a lot of results, so to help me improve. But for someone just to, like a beginner, just to land to Puerto Rico and just go around, like you're gonna annoy a lot of people. So but it's just so I had the advantage. I already made some money trading. I had some success, and I just built on that. But yeah, definitely you can do that. It just takes a lot of, you got to uplift your whole. So I'm also a single man, and I'm flexible. I can just I can leave like that. I don't have any many material possessions I can leave behind, so I can just go at the moment's notice, especially back then. So it does. It's not as easy as it sounds, and also it can't just, in my opinion, it shouldn't just be for like a month or 2 or 3. When I went down there, it was for like at least a year. It was committed for a year, and I'm gonna focus. I remember seeing some videos of like Kobe Bryant, or Michael Jordan, one of those two. Like 1 year they focused on defense. 1 year one of them didn't do well with 3-pointers. The whole year they focused on 3-pointers. So it's been like that for me with trading. It's like I'm gonna put 1 year into this at least. And I'm going to learn as much as I can in networking. And I know networking, I didn't know back then how powerful it was, but I know networking now, and meeting other traders is so important. And that's why you see me at these events, because I'm still trying to, go to new levels, and still trying to improve every day, a little bit every day. So, but yeah, it does. If you're coming in there with the mindset and able to take advantage, it's the perfect place. But, to be honest, I've never seen anyone do what I did, So unfortunately, I recommended it to a lot of people early on, and I didn't see anyone fall through with it. I think it's, unfortunately. But I think immersing yourself in the environment for a long period of time, that's how you learn a language. And trading is a language, So, it was a great experience for me, and I still have good friends to this day, that I talk to on a daily basis from there.
That's great, and especially to end up in the trade space office. I didn't know that's where you were, but I mean, what a phenomenal group with Lucci and those guys, Anand. That's great. What were some of the things that you took away from that experience that you wanted to go immediately learn and improve on? When you left Puerto Rico, what did you start to set your sights and your goals and aspirations to following that?
Yeah, so being over there, I made some friends and that trade a lot based on fundamentals and do short reports. The White Diamond Research, I worked with them for quite a bit. And my good friend Adam, he's coming to speak at my conference coming up in October, Adam Geffert. And Adam taught me a lot about fundamentals and biotech specifically, because he used to work for Martin Shkreli. And Martin Shkreli is, specializes, he had a biotech fund. And so I learned a lot about biotechs, and I learned a lot about fundamentals. But I still wanted to learn more. So I had a long way to go, because Adam had learned about that stuff through many years on Wall Street. He worked on Wall Street, like out of college and stuff. And And so for me, when I came back to LA, I decided to focus that next year specifically as much as I could on fundamentals. So I worked on fundamentals as much as I dedicated 2021 and 22 just mastering fundamentals as much as I could. And when I got back, that's what my focus on. And when I got back over here, the podcast was already 50 episodes deep. So that made it, so the podcast is what has always been my window to knowledge, so when I turn the camera on and I can invite guests and ask them questions. So there's been authors that I've read their books, I've invited them on the podcast and I asked them questions. Twitter, I see someone post on Twitter or X and I like the post, I'll invite them on the podcast. I did that. I didn't understand spin-offs a while ago, a long time ago. And I saw someone post this very good post on spin-offs, and I invited him on the podcast. Rich Howie, I think his name is. And he's friends with Maj Suedan. Maj Suedan is in Puerto Rico. I know him very well. Then I'll ask Maj questions. So and I'll invite Maj on the podcast to talk about it. And then I'll invite Adam to talk about it. So it's constantly refining by doing the work outside of trading hours or whatever, as much as you can, reading, searching for knowledge, and then having the podcast, it's so viewership doesn't drive my goals with the podcast. My podcast is for myself to improve first and foremost, and I want to add value to people, of course, but that's what got me early on to get through the hump of that's why most podcasters they don't last that long, because it's tough to see 20 views, 30 views, 11 views. But I didn't care because I was getting so much knowledge. So I would just keep going. And then just by episode 50, 100, now all of a sudden you get some traction. But yeah, just putting together just a drive to learn more and improve. And if there's with trading, whenever I don't understand something, I want to go figure it out. So whatever the case may be. So if I'm trading off technicals and understanding and is working well, but I know there's much more to this. I want to know more. I think information is really good edge. So I want to know more about supply and demand, which is dilution, which is what drives when do companies do more dilution? When do they raise money? What are the higher odds? So figuring out just is a constant puzzle to be solved. So,
David, what's one of your go-to trading styles that you tend to look for when you want to enter a trade, or something that catches your eye?
I like to have conviction, to the max. That's what we all want as traders. So for me, that kind of level of conviction comes through the short reports, which we're going to get into in a bit. But the short reports allow me to deep dive into the company and put it out there and expose it. And I love doing that. It's a really big passion of mine. And I really am truly inside an activist, a real activist. It drives me. Anyway, so with that, I have all that conviction from the company. I know it's a scam. We use the F word sometimes, the fraud word. A lot of times in reports, you got to really know what you're saying if you're going to use that term fraud, because you can be, possible sued. So, but yeah, I like to have, that background of the company is a scam. And I understand it's a scam, and in some cases I've been there personally and have seen it and checked it out. Now this becomes a blacklisted stock for me. You come into a certain watch list of mine, and it's there for like a felon, 7 years. It's there for 7 years. And those companies in particular, they are usually the same story all the time. The reverse split pump and dump cycle. They will pump their stock, raise money, dilute it to the ground, and then reverse split it, and then pump it again, dilute it, and the story goes over and over. The trick is, when the supply is too low, you don't want to get involved because it's going to squeeze on the short side. And I know some people that long it, but my longs in particular are from stocks that I don't short. It's just like that's the way I've simplified it for me, so I can be able to flip the switch easy. I know my identity as a trader; that's part of it. But I do know some traders that long, when the float's low and waiting for a PR for the pump and everything. So, but I stick to the short side. So yeah, that is my go-to. If I could have my way, I would just short these. I wish there was a lot more of these on a daily basis, and I could just short them forever. They are like I call them like short into perpetuity, like short forever kind of stocks. And as long as the float checks out, and the supply checks out, and the demand is not part of like a theme, because once in a while these things could be part of some bigger overall theme, and they could go insane. But with that, let's go check it out. Let's the first one we have is MNTS. MNTS is Momentous Inc. They're a space propulsion. They claim to have some like water. I think they might have pivoted now, but initially when we were part of the short report, when I put the short report out with White Diamond, it was a space company, a space SPAC, and the NASDAQ labeled it a fraud when it first came out. It has some like Russian national behind it that was known for fraud. The CEO was a Russian national known for fraud, and that was back when it came out. So it's just gone. So this is like the reverse split pump and dump, so like look, it's this, they just keep reverse splitting it forever, and it's going to end up like this until it goes to zero. However, you can't, you know what I mean? So every time they reverse split it and the float checks out, I'm looking to short it. So 2 million float is doable, but see, this is right after the split, so unfortunately I'm not going to be able to capitalize off of that. But I do write a lot of notes of like dilution, and I look for those dilution prices. Usually the one that's the higher price one is where I'm looking to enter. But here, over here I think I shorted it. I don't know, it's been a while, but I'll be looking to short this thing every time it pops. Like especially last year, I remember they had, every time I write notes is like when I'm looking to short it. So they have right now. See, it says 74 cents, 96, $2. This day in particular, they ran it all the way past 2, and they knocked out all these warrants. I was able to capitalize on it. And then now in the chart, it gets lost. As you see, it says $20, whatever, because they reverse split it. But during this time, up here was like $2.30 something. I remember this one, and then it comes straight down. So they just keep doing that cycle over and over and over. And they just, they do an offering that includes warrants, and then they take it to the warrants, because it's the NASDAQ labeled it a fraud when it first came out. So for me, it's like once you're labeled that, you're just a sketchy company for a long time, So now sometimes these companies, they will reinvent themselves and new ownership will take over, but but more or less it's just like I treat it the same way it's supposed to be treated. And I call this like, short into perpetuity. Kind of always just short it whenever it pops up. And as long as the flow checks out, and as long as it's over the dilution prices, I will always short it. Now, however, if it has no dilution, it's kind of tricky. But that's why the float is more important. Because like, for example, recently, 9 million float, little bit of cash, but they had no dilution, and but like the 9 million float, that's good enough. I have criteria that can I can trade off. Like this is over 100% up. That's one of my criterias in the morning. Over 100% up. I think did it gap? No, it didn't. Kind of. Yeah, I'll take a short over 100%. It's like very clean to short it. And this one, like I'm not going to short it late day, but it did provide a couple opportunities. And if you have that conviction, if you don't have the conviction of like, this is MNTS, this is a scam, it's a space scam, it's not going to be, it's because they always come out over the years with like some news and a NASA grant or something. It means nothing. So it means nothing. Now, however, scams can squeeze more than you think, like just because it's a scam doesn't mean it's not going to squeeze. So these things squeeze super, super nasty. So the trick is to have really solid criteria, to respect the squeeze and to stick by the rules, So yeah, that don't just be it's a scam, jump in and short it, you know. So, but this is like the concept of what I like to short. In an ideal world, this would be all I would do if they would come up all the time, you know, like a scam stock with a lot of dilution that's known to dilute, and I have that conviction. I could even put up a follow-up, a short report if I need to, you know. So ideally, so a lot of the stocks that we're going to speak about following this one follow that same game plan. You know, it's just a scam that's reverse splitting over and over. If the supply is too low, I'll look to not short it, and then when the supply is, you know, falls within my criteria, and I will look to short it. You know, so but yeah, always aware of like, you know, the supply and demand of the stock.
Yeah, yeah. And I love that you keep notes detailed about the float, because, and correct me if I'm wrong, but these are like toxic financing situations here where the company has some sort of underlying issue with the financials. The shareholder value is, you know, potentially negative sort of situation. Is that all correct?
Yeah. So these exactly. So they do toxic financings over and over and over. We've seen this with MNTS, MULN is a famous one, you know, and yeah, these other stocks that I look to short. So just they raise money, toxic financing. They always need cash somehow. They always burn. They, you know, yeah, they always need money, and the stock exists on the market to take money, you know. So like I don't know where it's going. It's going to the warrant holders and the CEO or who knows what. But this company is never going to really do anything. So I have a really good video of it on my YouTube channel, MNTS. I did this one. Yeah, I did a video on it, and I put like it was funny. I put like the cover art of like a spaceship with the water emoji on it, because they actually they claimed, I don't know if they might have pivoted now, but for a few years, their whole thing was, we're gonna have spaceships with water instead of fire, like to push the spaceships.
Oh
and
my gosh.
it was all just bogus. But they would get NASA contracts. You know, these contracts are not for that much, $1 million here, $1 million there, or whatever. But you know, the company exists to get all that money.
Yeah.
So
yeah,
it's a vehicle for people to get rich.
yeah. And what was sort of your what was some of the most compelling investigative work that you did for this, against, you know, kind of the against the bullish thesis here? You know, like a lot of people might see something move 50% in a day, or they might see the PR about a government contract and they might be very bullish about this. What was different for you? You know, why didn't you fall sort of victim to the hype like so many other retail traders, long only type of traders, you know, fall into? You know, what did you learn about this company? How did you come to your conclusion?
You know, so that's a very good question. So I think experience plays a part in this. So like when you're around more than just a couple years, you get to see how, you know, over the years, over and over and over. Like I've seen I have a whole watch list of space, and I see how these government contracts work out. Or like whenever NASA's in the headline, I see how far these things go. Sometimes it all depends on the float, for the most part. But you know, but it can even the bigger ones, the bigger companies, the mid caps or the large caps, they can go for several days or weeks, and it's just experience, you know. I think because I see how it ends. So like MNTS, with this one in particular, I know how this ends, because it's had multiple spikes, and like I know how it ends. You know, like we see, like it has this 1 or 2 day spikes. It can be very frustrating though. Like it doesn't just die off immediately. But yeah. So stocks, they all have like personalities, and I think more than personalities is like when you do that investigative work, when you're part of that, you really understand. Like it's almost like you can put a face to it. Like I can put a face to who my opponent is in the chess game. You know, so. And then with that, it's like, what are they planning? Like, you know, so that's how I'm able to have more conviction. Also, like, when, like, instead of like all these warrants that they had, knowing how Armistice plays their warrants as well. So this is like, that comes from experience, and knowing that they do take these things sometimes with no news. I think this had no news that day. It's crazy. And I think, as an investor, I think a lot of times too, the longs, they get rewarded for like bad behavior, unfortunately. Like, it's like it's been since the stock market existed. I remember I read, like, in Jesse Livermore's book, The Reminiscence of a Stock Operator, and several other books of like some market wizards, like from way back in the day. They would buy all, like, when the track companies would, or like, I forgot what it, like, or steel companies, whatever, would go, when that sector was hot, they would even buy like the bad companies, and just like a good trader could capitalize off the whole sector, because like a rising tide lifts all boats. So a lot of times with these companies, they're in the space sector because it's hot, or they're in the AI, but these are very bad companies. And some in particular are like nefarious companies. Like, they will just blatantly pump and dump their stock, and MNTS is one of those. They'll just blatantly pump it and dump it. And a lot of the long traders, or I think there is like a couple versions of the long traders, like the ones that are gullible, that really believe in it, that bought into it, and unfortunately there are a lot of those. And there's some that buy it based on the hype, and then they're and they get rewarded for it for every now and then they that habit continues, and until they lose, until they lose big. So, and MNTS will take their money, so, because they can't so MNTS is not one that's going to continue going with the space news or the space theme. It's likely to just pump and dump. So
yeah. And David, are these mostly intraday trades, or do you ever swing some of these? Because sometimes those, if it's a hard to borrow stock, sometimes you have overnight fees and margin or cash on hand kind of.
Absolutely. So earlier when the report came out, it was easier to swing short it. Let me see. Damn, it's been 5 years, 2021, 4 years.
Yeah. And I was going to ask, what is the split adjusted all-time high for these? Because those always get kind of ridiculous.
It's a lot. Yeah, it's like, this is 20,000 now. Oh my God. But it was easier to swing short it here. These days, it's hard. It's not a swing short anymore. So this one will be. So see, after the report was in 2021. So. But I have that in the back of my, for my conviction. Like, I know this company well. It's like an old buddy. And these days, like, when it comes up, it's an intraday trade, and sometimes it'll be a swing trade. But as you see, it usually doesn't. It gives enough of a drop in a day or two. I'm not going to hold it forever, So, because like you said, the borrow rates, and you get bought in, stuff like that. So these days it's not, but it does provide. So every time it pops up, for me, it's like it's an easy opportunity, because I know this company is not gonna super squeeze to $1 million. I mean, there is a chance, but it's not. It's like. More than likely, they're just gonna run it for the scam and cash in on it. These nefarious individuals, and until it goes to zero, till it gets delisted.
Yeah. I mean, I think that was part of my next question. Is about the risk management of all of this, and if it's intraday, that makes sense. Is this the type where you'll just short it once and let it ride throughout the day, or are you in and out throughout the day? What might that intraday trade recap look like for you?
Yeah, so in this one, for example, over 100% is when I entered, and I cover on the flush. I use anchored VWAP for my entries and exits. But anchored VWAP, I'll short it at the top deviation, which in this case is just over 100% off that extension, and I'll cover on the flush under the VWAP. I'm not going to hold it all day because this is at this point, I think the market cap of this company is still very small. So that's another thing I take into consideration is the market cap. So yeah, it's a 20 million market cap. So this is a very tiny company. So like when the short report came out, it was a bigger company. So it's a bigger market cap. You know, so this, you don't want to be swing shorting or holding a low. I don't want to be shorting that. If I get a nice flush like that, that's a good flush. I'll just take it. You know, I'm part of the meat of the move for that. I'll just take it. Because so I have several strategies, and the swing shorting or, you know, the short report style, putting the short on for that is just, it doesn't fall under this situation. So, but I will short this, and I won't be trading it midday or even power hour. You know, this is just lesser odds. Here you can see they tried to break it out off the morning highs, and you know, these days shorting into the resist, like it's more likely to cause a lot of headaches and continue. Yeah, how many times have we seen that? Just continuation off the breakout from the previous high. You know, it's
absolutely,
yeah. So especially for power hour. So the edge comes for me in the morning. I get a nice flush like that, and hopefully it does it again day two. But as we see in the history of the stock, like it barely has day twos. You know,
right. David, I wanted to also ask a little bit about another stock, which was Flora. It was Flora Growth, I believe.
Yeah. So let's go over the chart very fast, and then we can talk about the story behind it. So now, as you can see, it's a reverse split cycle again. They just did a reverse split recently, and it's $22. You know, recently the stock was like under $1. I don't know, the last time it was in play. So it's getting ready to be a short again. The only problem is the float needs to be, I like over 2 million float to, you know, and a nice solid month after the split. Let's see, FLGC. What's their float? FLGC.
I've seen a couple different sites with different float numbers. And since your strategy is, you know, very much focused on having an accurate float, is there a particular, you know, site or way to calculate the float that you trust?
Yeah, very good question. So these days, we have better tools these days, and it's a good thing. However, now everybody has access to these tools, so now like everybody's looking at the same thing, and it's helping cause the squeezes. But you know, overall, I think it's doing better good than not. But when I first started trading, you probably remember this too. We had nothing for float. It was kind of like you kind of feel it, you know, in the price action. You know, you kind of know from Yahoo or something, or they used to have some old site, floatchecker.com. But these days I specifically use Ask Edgar, and I will see the float there. And at the same time, Ask Edgar, they have a Discord. JJ's really good in there. Like you can ask him questions and be like, hey, is this up to date? He's like, and it has like a little verification mark, a little check mark, like if it's up to date. On top of that, you can ask the AI. The co-pilot, like to double check for you. So nothing's perfect because like those floats are updated from the latest filings, and sometimes they're dumping stock and we don't know, you know. So that helps to increase the float. But like we have to be on guard that, you know, the float could be, I don't know, it could be very, very low because like maybe they haven't dumped yet. So we don't know if they've dumped until the filing comes out. So we have to like, I always round down, you know. So for example, Ask Edgar says the float is 400K for Flora Growth. So I know what they're getting ready to do. This is pretty predictable. So it's not a short now. That's a really nasty float. But they're going to probably put a PR, pump it, and dump it, you know. And then that will go from 22 to 15 to 10 in a couple months, and then in another couple months it'll be down at $4 or $5, and then a couple months from that it'll be down at $2, and a couple months from that it'll be under $1, and by next year they'll do it all over again. Speaking about Flora Growth, that conviction for that one is like no other. Like I have super conviction with that one. because I actually went to go visit the site in 2021, right after Momentous. I believe it was after Momentous. Back then, it was a very good environment for, just everything. Anyway, I went to Colombia. I took an airplane straight to Bucaramanga, Colombia. Took a motorcycle up the mountain to the cultivation facility. Like the weekend or a few days before, I had been digging through the filings and finding all the locations of the sites. This was a trade space at Lucci's office. And then White Diamond Research, Adam was there, and I proposed it to him, and he's like, yeah, it's a slam dunk. Because the stock was trading Flora Growth at the time. It IPO'd. The IPO lockup was about to come. It was 180 days was about to come. And the stock was just zooming up. It was like $25. It went from like the IPO at $3, went all the way to $25. This is another thing, like context, you never forget it when you're actually part of it. Like that's the thing with short reports. I really learned deep dive, like fundamentals through short reports. So you never forget it, like when you're part of it. Like I'm able to recall these things like after 4 or 5 years later because I was so immersed into it. And so yeah, that experience. So I proposed it to White Diamond Research. They said, yeah, all right, let's go. This is a great short report opportunity, but we need the damning evidence. And I said, hey, okay, so what if I go there and check it out for myself? And I said, oh, you'll do that? It's like, yeah, I'll do that. And I went there and flew in there, took the motorcycle up. I had some cameras attached to me, some small cameras, one in a pen, and I confronted the people at the gate, and I was like, as an investor, I was like, oh, I'm an investor, in Spanish, and they were all confused because this was like a 3-hour motorcycle ride up the mountain, and they looked really annoyed because, like, think about it, like, I think they're aware that their stock is at all-time highs. Like when I was up there, the stock was all-time highs. It was like $25 and something, and it was a Bowstead stock, by the way. So Bowstead was the underwriter, very sketchy underwriter, and I'm sure they were all about to cash in. And then they told me to come back, and I didn't want to like raise a suspicion, so I was like, all right, I'll go and come back, whatever, because I came unannounced. So it's like, but I really didn't want to come back. It was like 3 hours down the mountain and then 3 hours up the mountain again. So took 3 hours down the mountain. This is so dangerous. I would never do this now because like there was no lights up there. The sun sets and it's dark. It's like if it would have been dark, I would have been stuck up there, with no Wi-Fi. So it's like one of those things. Like I guess I was so naive, or I don't know what it was. I just didn't think of that. I was ignorant that it worked. And then when I came down, the motorcycles were all the motorcycles. I went up with the translator just in case, but the motorcycles all deluged with like mud, and like imagine if that would have happened up there. I would have been stranded up there. But anyway, I came back 2 days later, and all hell broke loose up there, and one of the board members was there, the cultivation guy, and yeah, he like grabbed me a little bit. He noticed my camera, and there was cartel up there for sure. I think that was cartel. They had like camouflage, and they were like skinny with tattoos and like looking real sketch. I think it was cartel. So I just got out of there. I just took the motorcycle and got the hell out of there. But at one point there was like a standoff. Like they were just staring at me, and they were waiting for the orders from the cultivation director. Like I think if he would have said like, "Hey, get him,"
Yeah.
I think they would have got me, because like, this is the middle of nowhere in the mountains in Bucaramanga, Colombia. There's no Wi-Fi. There's no people up there. There's nothing, So I think they would have threw me in the shed or something. I don't know. I just don't know. Just the same way I didn't know like what I was getting into. I don't know what had happened, but I definitely would have not. I won't do that again. But we did. It was good enough for the report. The report showed the damning evidence, believe it or not, was because I didn't get to see the site, the whole like tour of the site or anything. But the damning evidence was the infrastructure. So they were claiming that they were gonna ship marijuana around the world for 3 cents a gram, all around the world. And how are they going to, but they didn't explain how. So like they didn't have any infrastructure. They had mud roads that you could barely go, a dirt bike could barely go on it. I was on a dirt bike, and it was all documented. There's no other way up the mountain. It was a one way in, one way out, unless you have a helicopter. So that was the damning evidence. And then also, you know, it didn't look like they had much up there. They were claiming to have like 650 acres or something like that. And there was some pumpers involved with it that claimed. So I was able to shut the pumpers down. The pumpers claimed that they took like a motorcade up there with Hummers, and like there's nowhere for the Hummers to go. So like that's a lie. That's a straight up lie. I'm there. Like there's no Hummers going up there. There's not even cars. There's dirt bikes. So yeah, that was a unique experience where I got to like. It didn't even occur to me about the infrastructure until I actually went through with the whole thing. So it was a good learning experience. That like going to the site, a lot of things will reveal themselves as you go. Like you won't be able to notice it like by doing the research in a way, you know, like in the computer or something. You got to, you know, sometimes it's good to go there.
That's incredible. I mean, that's some like next level hardcore conviction to investigate a company. You know, what would 2025 David tell that earlier version of yourself before you go in there or while you are on your way there? You know, what would you say about it now?
Well, no, honestly, I wouldn't change a thing. I just wouldn't do it now because I have a lot to lose now. But back then, I really didn't have that much to lose. I was living off of like very minimal lifestyle, just a few shirts, 5 boxer briefs, 5 socks, and I would just wash them once a week. And I would go place to place I was in Puerto Rico, you know, yeah, my life was just to get better at trading. And the money I made, I would just like kind of hoard it. I would just hoard it. I didn't know what to do with it, but I was just, I was, you know, still in student debt and still improving, and just, I wouldn't change a thing, man. You know, so I had this big chip on my shoulder to prove myself and to kind of, you know, just have that opportunity. I wanted that opportunity to prove myself. And when I went to Colombia, I bought a one-way ticket, you know, so I was like, I'm not going to leave until the job is done. And when I went up the mountain, although I didn't really know how bad it was going to be, I did say to myself, I remember saying to myself, I was like, you know what, I'm not going to come down from the mountain until the job is done. I'm going to see what's up there. I'm just going to keep going back up until I find it. Because I didn't even know where it was. I had to like ask around and stuff. And the neighborhoods there are like so far apart. So like, and they're all sketched out when you ask. So now if I had to go and tell that, I would say, no, I don't think I would say anything. Because if I would say something, maybe it would scare me not to do it or something, you know? So I think it's all about risk reward. And for me, I thought the risk reward was worth it, you know. So now the risk reward would not be worth it, you know, for me. But back then, I had very little to lose. So
one of the things I wanted to talk about more broadly too is about short sellers and sort of the stigma or the perception of short sellers, that they don't care about particular companies' ability to grow, and they're just trying to take down the market. You know, it's very negative, but in a lot of ways, you know, the reports that you're putting out and the research could be beneficial for long shareholders, you know, hoping that the price goes up. You know, so what are some of the, you know, your view of short sellers and why you do what you do?
Yeah, you know, so I think maybe that's going to change in the future. I think if people understand, because in the past, you know, before the internet or before people, now there's a lot of people trading these days. You got even Robinhood, and the pandemic exposed a lot of people to trading. So it's not like that's, like, I know when I was learning trading, there was that like old school example of like short sellers are evil and they want my stock to go down, and he's an evil guy, like he's just profiting off of my loss. And people, that would be like the stereotype, and I know because I encountered that in those early message boards with PRED. You know, here I was trying to expose the bad guys, which was the Pred management and the Pred people at Pumpers and the Birdman, and then they blame me. They blame me, and I I wasn't even shorting the stock that hard, you know. So, or they'll blame Hindenburg. I remember they blamed Hindenburg so much when they put out the report. But actually, it's the opposite. Short sellers provide a balance for the market. They provide exit liquidity for longs. They you know, so it's also the SEC is not staffed as much especially for mid caps or small caps. You know, they really can't. You know, they can't catch these smaller fish, even though there's tens of millions of dollars, these companies, or even hundreds of millions. It's still too small of a fish. They're focused on like way billion-dollar companies, trillion-dollar companies, stuff like that. Once in a while, millions, $100 million companies. But yeah, it's just, you know, it's most short sellers that I know in the activist space are really, really nice people. They're stand-up people. I know them personally. And they're high character, and they know that there's going to be a lot of scrutiny, so that encourages them more to cross their T's and dot their I's. So I think if people would be more aware of that, I think that it would change, and could realize it's like when someone puts a report out and highlights a 20-page report or whatever, 10-page report, and highlights all these problems, is something that's important to look at, because you don't want to be blinded. You don't want to be just ignorant about that. It's, you know what I mean? So, yeah, I think short sellers, but in general for the markets, they provide a lot of liquidity and exit liquidity. Because when the stop drops, the short sellers got to cover, and that's buying, you know. So, so when someone wants to sell, they can, you know, cover it helps to cause a buy at the low prices, you know, when the stock drop.
Do you notice any commonalities among fraudulent companies or companies that are, you know, candidates for you to short sell, whether that's, you know, Flora Growth, or, you know, we didn't really talk much about, I think it's Next Play, which is one that I know that you've done work on as well. You know, are there particular characteristics that you see from all of these companies?
Yeah, absolutely. So MNTS, NXTP, FLGC, these are like the three stereotypical ones. Just like we went over MNTS, is like the stereotypical one that just repeats over and over just until it's delisted from the market, so it's eradicated. NXTP is eradicated now, and so you know, you can't short it anymore, it's gone. But the other ones, they're going to be like that pretty, you know, not, I mean, who knows when, they last longer in the market than you think, but than you can ever think. But the commonality between these three case studies, let's say, and it's like a case study because you can apply this for a lot of other ones, is the management, the CEOs, the people backing the companies. So in MNTS, the CEO was a Russian national fraudster guy, and the NASDAQ labeled it a fraud, and it was all, he was the person, the majority of the person behind it. He's not there anymore, but it's still, it lingers, it smells bad, you know. So that's that. Flora Growth, we had the orchestrator behind it, Stan Barty. Stan Barty was he's been involved in several of these, you know. It's like is you know, and he's been in the report. We put a photo of him in the past. He has photos with the Wolf of Wall Street, you know, Jordan Belfort in the heyday, in the late 90s, middle 90s, late 90s, you know. So, you know, it's the people, you know, it's their reputations. NXTP, the same thing. The CEO had like multiple wives and will funnel shares through his wives and his ex-wives, and, you know, so it's like the character of the management, of the CEOs in particular, or the people, the founders, usually a red flag, you know. And you know, also like the history, because like character is important, because that's what causes a lot of these companies, you see, they're riding the hype. Like when you see a company do something, and all of a sudden it switches to AI, and all of a sudden it switches to NFTs, and all of a sudden it switches to crypto, and then all of a sudden, like, you know, and then the person behind it, the management has bad character. You know what they're trying to do. I already know what they're doing. They're just trying to make some money off this thing. You know, it's a temporary thing. It's hype, and it's just like they're likely gonna find a way to dilute their stock and run this whole operation. MULN, look at MULN. Oh my God, Dave Mishery. It's like the CEO of them. Like, I don't know if you saw, he goes on CNBC and they ask him hard questions about the reverse splits, and then he just like he turns his mic off and is like, "I can't hear you, I can't," and then he just disappears. Did you see that one?
Yes. Yeah.
So and he has like private jets, and I think he was tied to like Death Row Records in the past. I don't know if that's true or not, but like it's a lot of just sketchy activities at the end of the day. So it's like, I think that's like the go-to for me, is like I will just dig first into the management, into the people, and just to even pull up background checks. So that's the thing, so yeah, it starts with that, and then once you get something like there, then you go deeper, like you go deeper and deeper. Just it will surprise you. By the way, PRED, the same thing. The CEO had some of those character flaws too, and he would try whatever he could to pump that stock. The one that Hindenburg reported, one of his earlier ones, and it's the go-to for sure.
Do you ever see any sort of backlash other than online, or ever feel worried, like physically, about some of the reports that you've issued or anything like that, beyond when you're actually boots on the ground in Colombia? Do you ever face threats and things like that as a short seller?
Yeah, there was one stock that was my first time. So I've only been in the market since 32 years old. It's been like almost 10 years now. But so it's kind of, and I haven't really been in since like 2019 till now is when I'll really count. So 5-6 years. So I'm still kind of new, So I haven't had that experience multiple times, but I have had it once already with one of the stocks we were doing short on. I don't want to mention it too much, but when someone's outside of for example, in Puerto Rico, someone's outside, "Hey, David," it texts me, "Hey, David, nice shirt. It's a nice day today. You want to grab a coffee?" I'm like, "Who's this?" And just like multiple times. It's kind of weird. And I'm the type of person, I'm not really scared or anything, but it's annoying, It's like, hey, I don't want, nobody wants that, So, but that's part of the activism world, So it's like that comes with the territory, So these companies, as you can see, they don't just get wiped out of the market. They they fight back and they slowly die off, So they are gonna find a way to keep doing what they're doing, and like they don't like that you're messing with their pockets, So, yeah, it's something that's part of the activist world. That's why I'm not as heavily involved as I was, like boots on the ground like that, because I have more to lose now. But yeah, that's something that comes with the territory of activism.
Always really good to know what the potential is, for anybody out there who's planning to do something similar, and that's why I appreciate you answering that question and sharing that part of your trading journey. I wanted to switch topics a little bit to the work that you're doing with Friendly Bear, as the podcast, as Friendly Bear University, as Friendly Bear the conference. Can you talk a little bit about what inspired you to start each of those, and what you've learned during the progression as those have gone on? Because they're all, I think, amazing offerings for the trading world out there. So I just wanted to learn more about it.
Yeah, thank you. So it all started, the best things start, I think, when you don't plan for it. It just happens, and it just grows naturally, organically. So the podcast started when I wanted to find more information and to connect with more people. I didn't even think about the networking opportunities it will lead to, but it was that. And I was just curious, and I wanted to find out more. And the podcast led to some people asking me, as I improved as a trader and as a short seller, just kept improving, I had people reach out to me to learn. And I didn't want to teach. I didn't want to teach at all. I was, I was focused on myself. And one of my friends, who I partnered with early on encouraged me to do it. He said, "Oh, David, you can inspire others. You know, you switch careers. People, they switch careers as well. They don't know, you know, it's like you're inspiring. You get to travel and all this stuff and trading, and you enjoy it. And the podcast, I had people watching. So I was encouraged to do it, and it became like a kind of like a part-time thing from trading, you know. But then like I saw there was a lot missing. The students, they wanted to learn more and more and more. So that's how I came up with the whole university thing. And I was like, okay, I'm going to make a whole university, put everything I know. Like if I were to go back in time to David in 2015, I'll be like, here, study this. Because like back then, the materials that I had was very disorganized, and it was doable, but it was like a very uphill battle. Like I locked myself in a room for like 3 years to figure it out. So like what that's why people, you know, they need like a blueprint, you know. It's like, so you don't have to do that. You don't have to go in a hermit mode for 3 years and sacrifice 3 years. So yeah, that's how I started Friendly Bear University. And then, you know, I always wanted to do conferences. I like to meet people, and you know, I as you see, I was in Toronto, Traders for a Cause, San Diego, Puerto Rico, Traders for a Cause, and even in trade space. I love to interact with the traders and talk about stuff that I love to talk about, and learn more and meet people and make pods. You know, that like having a pod is so important. So I decided to make conferences, and here in LA, I have access to a lot of very nice spaces because I'm in a couple of social clubs in downtown, and I'm in the U.S. Bank Tower, very big skyscraper, so I can open up my facilities, and now it's like my people coming in, and like it's a wonderful event. This year I got Tom Hogarth coming. So Tom Hogarth, the author of Best Loser Wins, I've developed a friendship with him past year or so, past few months, early on in the year, and because I wrote a book. It's gonna come out next year, and when it's I'm not really gonna be pushing it now, but when I start to, you're gonna know when it's out. You know, it's like when it's gonna start to come out, I'm gonna be up, very, you know, I'll be everywhere talking about it and stuff. But the publisher is the same as Tom's publisher, so it's like we connected, and now we get to do this big event, and it's it's the biggest one I've done yet, man. So like with Tom Hogarth, it's a dream come true. So yeah, you know, it's just I'm just doing what I love, man. I'm just doing what I love, and just and enjoying the journey.
I love it, and I'm so excited for you. And I'm hoping that I get a chance to either make it out to LA, or for sure, you know, read the book, buy it as soon as I can, and read the heck out of it, man. So I'm looking forward to that. And, you know, thanks for all that you do for the trading community. You know, when I was curious about a particular topic or a particular guest, you know, I would search them on YouTube, and I would find you might have interviewed them, or, you know, seeing you online, posting online about a trade or an idea. It was always really, really cool to see. And so thank you for doing all that you do for the trading community. And David, if it's okay, I'd love to finish our episode with sort of a lightning round set of questions, if that's okay with you.
Yeah, absolutely. Absolutely.
Cool. The first question that I have is, you know, what would you consider to be your greatest strength as a trader?
As a trader, just I think being able to perform under high pressure situations, and also being able to piece the puzzle, like play 3D, 4D, 5D chess in that situation, in that high pressure situation.
Are there any particular indicators, technical indicators, that you prefer to have on your chart, either for an intraday trade to get in or out of a trade?
Yeah, I like anchored VWAP. So anchored VWAP, you got to anchor it to the, I like to put it like where some kind of catalyst happened, and where the volume related to that catalyst, and take it from there, and use it to guide my entries and exits on the short side.
Are there any parts of your trading in 2025 that you're still working to improve on?
Oh yeah, of course. Just adapting to current markets, you know, adapting and expanding my playbook, and just sizing up more, slowly and gradually, and just improving however I can.
Are there any trading resources, whether it's books, videos, DVDs, that you would recommend to an aspiring trader?
Yes, I think starting out with both of Mike Bellafury's books, the One Good Trade and the Playbook, are mandatory. I know it's a strong word, but mandatory. By the way, yesterday I had lunch with some former NFL players at the City Club where I'm a part of, where the conference is going to be, and I was surprised to hear they were joking around of how much video they used to watch and how much study time they used to do, like when they were playing, and how the coaches made it mandatory. And if they didn't do the readings or they didn't study the playbooks, they get off the team, and someone else is going to take over their thing. So it's like when I say mandatory, it's like in the Friendly Bear community, I say it's mandatory. It's you got to read it. Like, it's not like you can't like those two books, man. The One Good Trade and the Playbook, you got to read it. And then when you read the playbook, you're going to go down rabbit holes, and you've got to read those books as well, because Mike Bellafury mentions all these other books along the way. So yeah, you got to read those two specifically. First ones is crazy. I've read so many books. Those two specifically, first one's mandatory.
And I'll echo that. If you're listening out there and haven't read those books by Mike Bellafury, it's mandatory. Go do that.
Yeah.
Thank David and myself later. And second to last question, David, for those listening in 2025 who are having a hard time with the market, they're inconsistent, they're losing money, they're in a drawdown, what advice would you give to them?
Survive your learning curve. So that's what Brett Steenbarger says. Another one, I think, in the playbook. You got to survive your learning curve, so it's just like you got to stick around. You're not going to make any money right away. For me, the best thing was I didn't have much money to start with, so that means I couldn't lose that much, and just focus on learning, growing the knowledge account. So just, and as you grow your knowledge account, you're going to gain experience, and that experience is very important, and the only way to get the experience is to stick around. So yeah, survive your learning curve.
And last question, David, for those listening who would love to learn more about you, how you trade, or maybe even contact you, how can they do so?
Yes. Okay. So Instagram's good. Just reverse long on Instagram. X is good too. Reverse _ long on X. And definitely friendlybearuniversity.com. The conference, if you want to come to the conference, friendlybearconference.com. Those are good.
Okay, great. Thank you so much, David, for taking the time to chat with me today and recording an episode. I'm really, really happy that we got to do this. I learned so much. And yeah, I think the audience will enjoy it as well. So thank you so much, David. I really appreciate it.
Thanks, Anthony. Thanks for having me.